All right, traders, this is a standing offer. If you can show me a system that has a better backtest than what I'm going to show you, I will offer you a cash prize. Take it in Tether, Bitcoin, PayPal, Venmo, however you want. This is a standing offer. I don't think you can beat it, and if you can show me, it's going to be very valuable to me. But I'll be happy to pay you. And I think for most of you, I'm going to show you the best backtest you will ever see publicly. I know that's very boastful, but I haven't seen better. Maybe someone in my own group can tweak our system a little bit to make it slightly better in the video. That doesn't count. It needs to be a different trading system. So here are the rules. It needs to have a better backtest on Bitcoin, gold, and Nasdaq. So we have the leading crypto, the leading precious metal, and the leading index. No asset optimization. What that means, it's the exact same settings for each. The only thing you can change is position sizing to set the max drawdown to 50%. We're going to measure from 50%. I also require that it needs to be easily tradable by a human, so it can't take more than 20 or so trades a year. Our system takes less than 10 trades a year. Okay? So, starting with Bitcoin, by the way, welcome in, much love. Trav here. If you don't know me, I develop trading systems. Here's what it looks like on Bitcoin. It shows buys and sells. It's meant to look like a regular trade setup. It's the orange line is the stop loss. And what's cool is it's pretty good at sidestepping bear markets. That's that's pretty sick. So for Bitcoin, your backtest needs to be on Coinbase at least 54,000% return on a 50% drawdown. Now we're going to go to gold. Again, I'm not going to optimize. The only thing that I'm going to change is the position size so that our drawdown is at 50%, and we'll measure from there. So I'm just adjusting the position size manually. You can see all I'm changing is the order size. It's the exact same indicator. Sure, good enough. So for a 50% drawdown on gold, you need to return at least 131,000%. Okay, now the last one is Nasdaq. Not changing anything but the position size. Let's go do it. Sure, 51% drawdown, close enough. So for a 50% drawdown, it needs to return more than 25,700%. Those are the Nasdaq and then gold and Bitcoin. So the idea is what makes our trading system so good is that it outperforms buy and hold by a lot on all the main asset classes. And it not just outperforms buy and hold. We're talking 50% drawdown for a 25,000% return. Yeah, it takes 40 years. On Nasdaq, whatever. Still good to turn $10,000 into $2,570,000 profit. So a good trading system is robust, meaning you can change the asset, it still works. You can change the time period, it still works. Gold, we have 100 years history. Nasdaq, it's over 40. Bitcoin, it's 15. And this is a standing offer. You could see this 2 years from now. If you find a better system, I'll pay you. It's worth it. But I bet that you can't. And if you decide you can't and you want to join us, there's a link down below where you can get more information on the system and how to trade it. Let's just quickly look at the chart a little bit. See for Nasdaq how nicely it sidestepped this entire bear market in 2022 and had a long exposure, pyramid, a long exposure the whole way up in these rallies. Nicely sidestepped the entire move down in 2007, 2008. And my favorite part is when the dot-com bubble burst. I guess here it didn't do a good job of. I mean, on one hand, it looks like it got stopped out and missed this 100% move, but it also didn't take a trade from 2000 to 2002 in a time when the market, where it exited and where it entered, the market went down 75%. Now let's look at gold. Same thing. It's a trend following system with some special twists. Here, not great. It took a series of losses on gold on the way down, but such things will happen at times. And we see again, sidestepping, there was a major bear market. The gold bear markets often happen at different times than the other assets. So here it sidestepped from 1996 to 1999, didn't take a trade when price went down 30%. Yeah, there's periods where it's hard to be a trend follower, man. That's why asset diversification is good. Looks like we didn't have a winning trade on gold for 6 years, which could happen. Shit can blow off top and then, but you make all your money, you stick with the system, and then you make a fortune. Not every year is a winning year for each asset in the system. A lot of years it doesn't even trade. I have more systems that trade higher time frame and or maybe more consistent, but we're not going for consistency here. We're going for robustness and a human can implement it. So yeah, get in contact with me if you have a better one. If not, you want to join us, there's a link to that below. Okay, talk to y'all soon. Peace.